Hey there, this is David Cox, Senior Portfolio Manager at Financial Lane Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do Investors Stand? It is Friday, June the 26th, 2026. Let's get started. We will start off by week as we always do. You can see small and mid caps up at the top of the list here. It's been a risk off period for sure, though not necessarily visible too much at the broad market level. We'll take a look at that and more. But you can see silver and oil and Bitcoin all down at the bottom of the list and everything in between. Just a reminder to pause your video player at any time for more details. The Magnificent Seven, these are the biggest stocks in the world. We all use their products, the Googles and Amazons and Apples. And again, absolutely, they are not going up. They've been chopping around really in a range for the last kind of 8 or 9 months. You can see relative to the US market, as we've talked about before, they've been underperforming. In fact, they're making more than 1 year lows here, which means they're underperforming for the last year. And these are big parts of the market. So it's important to understand the market, and it's important to understand that a stock market is actually a market of stocks. But you can see here in the last month, we've had a lot of damage. In fact, Microsoft's down 15.7%, Amazon 14.5%, and so forth. But look at the S&P 500. So even though all those stocks are contained within there, the S&P 500 is only down 1.6%. So it's done a very good job of masking the large cap damage, really the mega cap damage. And so again, there's lots of stocks going on. In fact, you're going to be somewhat surprised, I think, to show that the breadth is actually improving, as I'll show in a second here. So again, a couple of weeks ago, I talked about the pullback and an uptrend in the S&P 500. That is still what it looks like, although again, we peaked out more than a month ago. The Toronto market on the right side looks like a pullback and an uptrend. It looks orderly at this point, although again, there's lots of disorder underneath the surface, lots of stocks moving around in volatile fashion. But again, that's what a stock market is. You can see here the S&P 500, the percentage of stocks above the 50-day moving average rising this week. Even though the market has come down, we've actually ticked higher, about 63.2%. And in the bottom panel, I usually like to see 60% here. So again, we've seen some recovery in the last several months, where now the market's got 61% of stocks over the 200-day moving average. So again, remember, even though some of these large cap leaders are fading away, that means other stocks are coming in to pick up the pieces, and they may not have much weighting in the in the market cap weighted indices. The truth is, they're still stocks, and they are on our radar. Let's look at the US dollar index. It has turned upwards here. So that's a 1334 week crossover. That's the first crossover bullishly since the end of 2024 last year. Really had spent a lot of years actually chopping around. But the bottom line is US dollar index is turning upwards, and that does have implications. We typically would think of commodities being weak and these kinds of things. Now, that's not always the case, but the bottom line is it is something we want to continue to remind ourselves of. Now, let's just take a look at some of these non-equity kind of areas. There's certainly Bitcoin top left, silver top right, gold bullion down on the bottom right, and crude oil. You can see the sell-offs recently from the recent highs. Gold is down the least, but still down 29.5% from where it peaked earlier in 26. Silver down over 54%, along with Bitcoin also 54%, and crude oil, well, whatever. Just a little bit of a run up here after the early season, the recent Iran war and whatnot, but again, it's pulled back. To say the least. But again, I've just inserted there in the middle, you can see the returns since the 2022 bottom, right? So risk assets bottomed, stock markets bottomed basically 3.5 years ago. And essentially you can see here that Bitcoin, silver, gold, all outperforming the market, and certainly the US outperforming stocks, Canadian stocks rather, and so forth. Bottom line is, again, markets can go through pullbacks, they can go through bear markets, they can go through up and down trends in the context of bigger picture, different trends, right? That's always important to remember. Canadian dollars are falling, that's for sure. So again, we can remember that Canada is in a recession, and now it looks like we're going to go and bail out a bunch of developers. Either way, the bottom line is the Canada is under pressure under pretty much every currency in the last few months. It is what it is, and nothing more, nothing less. Makes cost of traveling a little more expensive for sure for Canadians, but again, just something to be aware of. Semiconductors, lots of attention. Of course, this is a very important group in the market, and certainly a position and area that we have been well focused on from a client perspective. Again, just want to kind of dig in here because there was a lot of volatility this week. But when you look at it, the daily chart on the left, weekly chart in the middle, monthly chart on the right, nothing to see here. There's really nothing changed. Again, a bunch of volatility and even a gap down earlier this week. The market was down, semiconductors rather, were down 7% earlier this week. But again, they've just kind of bounced back a bit yesterday, and they're going to come down again today. But the bottom line is up, up, up. There's really not much more to say. So speaking of semiconductors, let's look at a few of the stocks here that we've talked about many times before. These are all in our All in Sync pool, and clients certainly are familiar with them. Taiwan Semiconductor, Advantest, that's the Japanese semiconductor company, and Lam Research. You can see those all made new highs this week. Those are uptrends, and they are uptrends until proven otherwise. Let's look at a couple pullbacks and uptrends, because I am a fan of buying pullbacks and uptrends. And so the industrial sector, I think, is a sneaky sector here that I think is very, very important, and I think it is something that investors should be paying attention to. It's been a focus sector of ours for the last few months, and again, what we're seeing now is we're seeing some kind of broader participation. We're starting to see some stocks here after multi-months here pulling back. In this case, these are just the last couple of months here, but Quanta Services on the left and MCOR. Some of these things are involved in businesses that, of course, are feeding things like AI, building the industrial equipment, feeding the buildings and data centers and whatnot. I mean, there's a lot of theme going on here, but the point is industrials as a group are strong, and here's a couple of pullbacks and uptrends. Let's finish off with Sector Watch today. There's the staples and healthcare up at the top of the list. So again, as the market has kind of definitely acted risk off, and it's certainly had a lot of volatility in a lot of areas, as I've already said. Yeah, sure, the defensive stocks have have outperformed this week. You can see gold stocks just getting absolutely crushed recently, just really hurt after the sell-off that has taken place since the peak earlier this year. And you can see there's technology as well in the US, down about 3.6%. Please follow me on X. I'm at David Cox RJ, and thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.